Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again at the gold market. So yes, there was really impressive action on the gold market intraday charts. Actually, bearish stuff that we have considered has not worked. So as you can see, despite that, we've got some reaction on resistance levels that we have specified, as market later has broken it up. And there were some reasons for that. So as we discussed today in euro currency, we said that if even picture on the euro chart hasn't changed significantly, there are lots of events on the background. So it's obvious that everybody are waiting for CPI numbers for its central bank meeting tomorrow, European Central Bank. We have some other even more important issues. First of all, I would mention the results of the 3-year bonds auction in the United States. It was absolutely outstanding auction. It's just because foreigners have bought more than 78% of the total issue of this bond. So this is record and really outstanding result. So demand for the United States bonds. What does it mean? It means that in general, on average, since the foreign investor starts buying United States bonds, they are sure that Fed will be more dovish than expected. So they suggest more pressure on the yields, which means that Fed should start some more dovish policy, or maybe they do know something about this. But demand was absolutely amazing. On the dollar index and on the 10-year bonds, I will show you. So on the 10-year bonds, you could see what has happened with the yields. It's just total collapse. Very significant action. Grabbers that we mentioned previously have been completed. Butterfly target has not been reached yet, but probably it's a question of a couple of sessions. And in general, if you take a look at the 10-year bond yield, you could see that it's constantly dropping since the beginning of the year. This is April, and here is actually from the top. So last year, so it was falling to the December. So this was the cancellation of the initial suggestion of the market. There was actual preparation for the rate cut of the Fed that was canceling when inflation starts rising again. And this is another attempt to make bet on a rate cut in Fed. Currently, it's already granted by the Fed comments. And you can see what has happened. So in general, yield has dropped more than the 1% for the 10-year bond. It's a very significant drop. And this correspondingly put some background for the weakness of the United States dollar. This is the performance, this is the attractiveness. It generates lower yield level, and this decreases the attractiveness of the currency. The United States dollar correspondingly, it's also support. This is double support for gold. First, the dollar is dropping. Second is real yield are dropping as well. And this keeps the bullish context on the gold market intact. In fact, yesterday we already said about this, that in general on the daily chart, context remained bullish, and we have this consolidation. We talked about this. That's some kind of the preparation for the breakout. We also have rising bullish dynamic pressure, but we thought that just market could just spend some time inside of this because intraday trends were bearish at this moment. Now market stands at the edge of this barrier on the top of this consolidation. And currently, guys, we do not have lots of options. Obviously, we can't consider taking new shorts by far. If, of course, you are not sure that this will be some big spike in inflation today, or some other factors might be that will support the United States dollar. But currently, with all this stuff in the back and performance of the dollar index, performance of the 10-year bonds, USD performance on the gold itself, we're not considering taking the new short position. Speaking about the long position, the only way that we see currently is probably the using of the stop buy orders. It's not really safe. This is accompanied with some significant risks because might be some spikes, might be washing risk performed or something. That's the risk. But at the same time, where you will place your stop if you will buy right at the top area, you will have to place it somewhere below some meaningful lows, which is 24.70, but it's a really very big distance. That's why it will be simpler trying to use the stop buy order if markets will be broken to the upside, move stops to the break even and see what will happen. So that's currently the only option. If this is not suitable for some reasons, you are not familiar with that, you are not sure that you will succeed with this, if this will happen, just don't worry about this. Just wait when the market will show the breakout, complete the targets, and then probably you could be able to take the position on the same levels on some pullback. Some retracement might happen once this target will be completed, because they are important targets. We have two different butterflies here, at least some minor pullback here have good chance to happen. Here, what we discussed right now, we're talking only about some very short-term performance, and today, maybe tomorrow, until the end of the week. But definitely this will not be suitable to everybody. On the full time frame chart, here you can see what's going on. That was our recent grabber. After some minor retracement here, pullback, the bullish grabber has been formed. And you can see what has happened after that. Market right now stands on the top. Here, the most important intriguing thing is that actually this grabber is still valid. And it suggests taken out of this area. On this chart you do not see it, because here you could see that this maybe here you also see it. I mean that on the futures it might be looking better, right? You could see that here is top greater than the previous candle. So here's the top stands 25 or 7. Here's just for a few cents higher, and it means that this is not the target because grabber is above this area. So the target will be on the next stop right there, and market hasn't taken out yet, stands close, but it means that theoretically market could try to make another attempt. But in general, if even do not take into consideration all these grabbers, you could see what has happened recently. So that was our XOP retracement, but later you could see what has happened. Market broken level, agreement resistance, ignored reversals, grabbers that have been formed, and just keep going higher to the upside. Now it stands consolidation near the top, which is also potentially bullish. From that standpoint of view, personally, guys, I do not want to take any short position in this market. The only options and decision for me exists is that either to use the stop order, trying to jump in when the market will trying to break it up, or follow the classical approach, just wait for a pullback, maybe if it will happen, to consider taking a long position, or just wait for an upper breakout and then make the decision already on the next trade. That's actually all that choices that we have currently. So that's why you probably will have to make the same choice depending on your personality or some specific of your trading style or something. And just let's keep watching and see what will happen.